Good morning, everyone, and welcome to my daily plan. And since I'm 6 minutes late, I'll dispense with the cute formalities of the little applause and all that stuff. Okay, so here we are at 6920, which I'm calling the gate going higher. I'm not really sure how much more room there is left in the tank. However, we do have 6940 as the gap fill area. You know, gap fills go both ways, folks. Not just gap fill down, gap fill up. So just okay, Q&A, we'll get to the Q&A later. Okay. So I'm a little late. Whatever. We had 2 power outages last night. Things got messed up. So I'm going to cut to the chase. I'm going to change my screens for a second. Give me 1 second. Discuss amongst yourselves, as they say. Okay. Oh, there's Nanda. Hey, Nanda. Wow, that's pretty cool. Where am I? Present your invite. Share screen. Okay, I'm just going to go to my Substack note. We'll blow it up. Of course, I titled it, They Stabbed It with Their Stealing Knives, I guess can't kill the beast. You know, the bears were partying like it's 1999 for about 3 minutes. And we had some weakness a little bit last week. We had a few days of weakness. So yesterday was your classic. That's all you got squeeze after the 2% dump on Tuesday. We got back a meaningful chunk of it to 68.75. Also, vol reset. We had that expiration craziness. Both the clench in the 20 area as well as the unclench yesterday that we spoke about when the VIX expired. And now we're kind of trying to find our equilibrium. Speaking of VIX, Larry McMillan, who I call the OG, who I first read his options Bible, as some call it, about 25 years ago. This was an official VIX buy signal. VIX down 3 points from a local high. The local high was 20.5, so a close below 17.5, which we got as an official buy signal. It's like a 30-day signal. It's not a today signal. Okay. So there was a lot of panic hedging. Also, we went down 2%, and we went over this last night in the webinar. A lot of that was, and we did it here too, was the whole surface reshifting lower. There wasn't a crazy bid for downside skew. However, there was a bid for volatility. It's different. The VVIX was a bid for volatility, but the actual bid for a downside skew wasn't that great. So as you can see, they stabbed it with their stealing knives, but they just can't kill the beast. Private chat. Good morning. You are not seen in Geld. I'm not sure what that means. Okay. Macro noise still matters, and we had that whole Japan yen interest rate thing, which our Secretary of Treasury said was the real cause for the sell-off. It was a 6 standard deviation move. So I'm sure the macro bros were not happy about all that. So yesterday we had like a 110-point range. Let's switch gears for a second. Back to here. You know, yesterday's range was basically 6,800 to 68 to 69.10, and then we kind of pulled back to 68.75. We were kind of trying to game out where it would pin at the end of the day. One of the subscribers had a great trade. He sold an iron fly for 440, 69.75. Sell the put in the call, buy the $5 above, $5 below, risking 60 cents. And so he did really well, a great trade, as we were trying to game out where we would close. Let me get back to here so I kind of stay somewhat focused. Yeah, breadth was 4-1, and the ES was up and it's still up. Now we have PCE, and we have today we have University of Michigan Friday, we have FOMC next week, and all that kind of stuff. So there's still event vol baked into the chain, as evidenced by, no, I don't really want to see the VIX 3-month vol here anymore. Let's just put something like SDEX in here. PQRS. Excuse me while I find my alphabet. Here we go. So this is the one standard deviation out of the money demand for skew. And so here we see the VIX 9-day, which is this Friday to next Friday. So, a week from now, is 15.89, and the VIX is 16, roughly flat. That's kind of a flat curve. It, quote unquote, shouldn't be that that flat. So there's still extra vol in the short-term chain, and we know where it's going to be. It's going to be this Friday. It's going to be next Friday with the FOMC. Not a shocker, and maybe whatever lingering things. Also, there's war clouds or whatever it is in Iran. I wouldn't be shocked if something happened. I'm not sure how the market will take it. Probably initial knee jerk, not happy, and then later we'll probably party on. Okay, and the VVIX, the demand for VIX options, not the demand for SPX puts, the VVIX spiked out at 120 on VIXpiration day, which makes sense. I think this is my personal whatever. What happened? The VIX hedges expired. They got to roll them out. They got to buy VIX for next month or next quarter or whatever their risk management thing is. So Eagles, why did they hire somebody like an offensive coordinator or something? But they seem to be having problems. Anyway, so my boy McDaniel went to Harbaugh in LA to the Chargers, which I think is interesting. I think he'll be good for the QB. I think he'll be better for the run game. Harbaugh is old school, likes to run it. McDaniel is a great run coach. I think that's going to be a team to watch. Anyway, back to what's going on now. Yeah, okay. I'm kind of a little blizzardy out here. So that's what's going on in the vol space. Speaking of the vol space, let's take a quick look at the VIX Decomposition Index. And we went over this last night in the subscriber webinar. We were talking about all things vol. So vol went down 15% or 3 points. A lot of it was sticky strike shift and parallel shift. Basically, the whole, not getting too in the weeds, the whole sector shifted down. Put skew gave up. Call skew went up a little bit. Downside convexity, upside convexity, both came in. Shape of the curve. Why? Because as vol comes in, convexity naturally shrinks. Volatility expected is the expected move over the divided by time. As the expected move comes up, because of volatility, the convexity, the gamma, or the rate of change of delta also comes in. Kind of, that now those Eagles. Okay, yes, the Hotel California. That's right. I have to get a better meme than that one. That one I did, I don't even know, 8 years ago or something. On the very lame meme maker. Anyway, see, there it is. Okay. Okay, so I went over the VIX curve. Today is about whether we hold inside the box or fail. Okay, so I'll get to that in a second because we have an interesting setup here. So we have personal income, personal spending at 8:30, and I guess I didn't see much impact. GDP revisions continuing claims. We had all this stuff at 8:30, and I didn't see a big red bar, so I'm considering that a green bar. PCE at 10 o'clock. I thought the PCE was earlier, but that's what my calendar said. No, that's it. Intel tonight, I think that gives us multiple read-throughs, obviously read-through into the semis, and also read-throughs into the whole CHIPS Act and into the whole Trump investing in companies and reshoring America and all that kind of thing. So it's going to be multiple read-throughs, the invest in America narrative, which could be positive, negative, or neutral. I don't know. Also, I'm watching the post-earnings reaction in Netflix, kind of as a tell for how forgiving the market's going to be or not. Mega cap, okay, down. A lot of them were down. We know that the Qs are underperforming, MAG is underperforming until yesterday. So when is the market decides time to buy those dips? I think Netflix is about to turn here at 84 and change, 85. So at least hold that zone and we'll see. Okay. So let's go to, I'm going to go to the options depth and then come back around. So right now we're around 69.20. So we have this box as positive gamma right here where we are. Sticky, hard to get through, but hard to get away from. If we get through it, we're entering this whole sticky zone from 69.20 up to 69.60-ish. But we have some negative gamma, not a clean ladder, but we kind of have a choppy, semi-wishbone-y path in that direction. 69.40, our gap fill is right around here where we have some positive gamma. So this whole area is sticky, stally, and depends what happens. Also, what tends to happen, why do my outfit always seem different from spot gamma? I don't know. Spot gamma has his own synthetic way of doing it, and his real levels are in his whatever he calls it, the trace, where he uses real numbers, where he uses his version of synthetic OI, which is not CBOE data. This is from the CBOE. So these are the levels according to the CBOE. His levels are according to his algo. He's a smart guy. His algo works, but that's the brief version of why they're different. So 69.20, we have this whole positive gamma mess here with kind of, no offense, Brent, love your work. I learned a lot from you. Still read your stuff on occasion. I still subscribe. Don't use a subscription as best I could. Just, there's lots of different ways to skin the cat. And hopefully you listening to me take my stuff and make it your own as well. Oh shit, Vol Trader's got to leave in 5 minutes. So I'm going to make this real quick and then circle back around. So we have this zone here. Below 69.20, we have a ladder back down towards 69.85-ish, whatever it is. I wouldn't be shocked to see us climb up and down this ladder. And let's talk about charm real quick. When you have positive gamma on top of you and negative gamma below you, which is a little far away, you have one possible outcome is you get stuck toward right near the positive gamma that's above you, like we did yesterday at 69.85, or this ends up pushing you down, you get pulled down toward the negative gamma. I don't know that that's going to happen. We don't have them big enough, close enough, but we have to see how the day develops. Also, other thing, locally, these are small numbers and buyers and sellers could come in and eat this up in one direction or another. Same thing down here. And then down here, 68.50, whatever, we have this clump, but we have a big bar down here at 68.50. Yeah, his levels are great, and so are mine. A lot of people have good levels. Haven't looked at his stuff in a while. His are a little more global, less granular for intraday. But anyway, I digress. Go ahead, Paul. What do you got? You have a
Yeah.
talk to us?
Yeah. I need to go. I need to go like in 5 minutes. So
So I'm going to shut up and let you go.
I'll just mention the interesting parts. Looking at the full January complex, we have a massive bullish shift indicating 69.70 on SPX. This is looking at January complex, right? Looking at 0 DTE, it's much more balanced, still bullish, but doesn't have the same trajectory. Seems more like 69.20.40 top side for today. Whereas if you look further without today and you look at the whole January complex, you see something much more bullish.
Now, if you
So
could see
for today, we have
screen, if you
69.40,
could see my screen
69.20
here.
to be. Wait, just a second, because I need to go. 69.20.40 is implied as the top side for today, but then everything seems much more bullish following afterwards. And from a lotto perspective, so where might the market run if it would squeeze? Definitely, like Donald Trump saying whatever, Greenland, this, that. Then 69.70 would be the top side for today and would be a very, very good short opportunity into tomorrow if we were to get there. Otherwise, odds show that 69.20.40 is a very strong resistance here at the open and probably will get a rotation down during the day. That's about all I have. I need to rush to some personal stuff. So wish you all the best and good luck.
Okay, thanks, Paul.
Bye bye.
And so here's the month of January. Now this has today in it, so it's going to look a little different afterwards. But see, I see it a little differently. I see that 70 areas. This here is going to be hard to get through. I'm not saying we can't, but we have to chew through this positive gamma up on top of us near 75. 69.25 seems to be the magnet, at least for now. We got this box here for the month, 6,900 to 69.25. And then below us here, 69.75, we're thin. Not much happening. Below 68.50, we're thin. Not much happening. All the way down to 67.75, the recent low. So we have to see how this unfolds. This is position numbers. The large positions at the round numbers kind of distort what the local hedging is going to be when we get there. I just wanted to point that. Okay. And I kind of think I went through the daily plan here. Yep. a few people got the 68.75s. Beautiful, beautiful. And, we were like trying to game out 68.75, 80, 85, 85 became clear that we weren't getting to it. So it was the 80, 75, 77 and a half, just under, just over. And that's kind of how that pin happens. We also had a 75 short, market maker long, customer short, 80, the opposite. And so we kind of went right between them, right between them. It was really a thing of beauty, right above the positive gamma, the negative gamma from above pushed us down. The positive gamma held us up by a couple pennies, right in there. It was a thing of beauty. And so let's get back to the option depth for a second. So I guess kind of the live options depth. Where is it? And so, as you can see, below, we have this kind of ladder, this small stuff here, down to 68.50. So if 68.80, call it 68.75, where we closed-ish, should break, then there's a potential for a pull down, but also shoots and ladders up and down between 80 and 69.10. So we have one zone, 80 to 69.20. We have another zone over 20 up toward whatever it was up on top, 69.50, let's call it. Big positive gamma that is going negative gamma that's going to decay and push us down. Decay and push us down if we don't get there. Get attracted toward the positive gamma sticky, whether it's here, or whether it's here, 20, depends where we are throughout the day. Let's see what else I got here. Let's go back to my notes. Oh yeah, we have JP Morgan. Let's not forget, coming around the corner, but it's not a biggie. We have JP Morgan's collar, the mama bear, not the papa bear. At the end of the month, right here at, I gotta make this go further. Let's go 72.55, just to make it wide in case we want to do some longer term stuff. At 72.10. There they are. There's JP Morgan up there at 72.10. I doubt that we get there. I'm just saying it for interest. We have plenty of stuff between here and there. 7,000 still an area of interest. 7,100 rather, still an area of interest. We have this whole. Now this is the other side of calls that were sold for today. But here's 14,000 at 68.85. That's probably going to hold. That's big. At 69.85 rather. That's a 100 wide gang. 69.70. So this whole area up there, 69.50. Could we get there if we can fight through this and this becomes support at 69.20? And we can get to that 35 top of the expected move. And like he said, if Trump says something, Greenland, Schmeenland, I don't know, maybe. Below 69.10, it's thin. That's what I was trying to point. There's nothing here. Nothing to really hang your hat on. Anything can happen. Do people buy calls, buy puts? What gets transacted near us? Even the 69.80 is small, so it's really nothing much. So there's positive gamma above us, potentially sticky, but potentially decays and pushes us down also, depending how far we are. And then depends what's below us. So I'm not ready to call it, a definite gap fill today. I'd be happy if we can just scrape out with a green day. 6,900. Okay, speaking of which, we have the 20-day moving average at 69, 10-ish, 11-ish. It'd be nice if we could get to the 20-day moving average. We're kind of in that area. Institutions like to watch it. We undercut and reclaim the 50-day moving average. I would think some programmatic buying. Notice we're back above the expected move from last Friday. Losing my death has been greatly exaggerated. See, we were, the other day we were all down here. Oh my God, that expected move shit was crazy. Not so crazy. Not so crazy. Do we undercut it or overshoot it sometimes? Sure. But absent other information, use in conjunction with gamma and whatever your TA flavor of the day is, that's something worth looking at. Okay, and so let me go back to this for a second. So let's see what the expected move is now for Friday. See, my subscribers get all this crap. Expected move for Friday is 50 points, so 65-ish, let's call it 50 bottom. Let's call it 40 bottom, which was the bottom last Friday to this Friday, and 65 top. We have that positive gamma up there, makes sense to me. All-time high, I think intraday was what, 80 something, closing was 75. Oh, EM stands for expected move. Expected move based on the straddle price. And so I guess in case some people might not be familiar with the nomenclature or with where you get that from. So real simple. Do I have? Hold on, I gotta log in because of the power outage. Everything kind of closed down. And it took me a while to get things running right. That was one of the reasons I was late. Give me 1 second here. So getting back to the whole EM, one easy peasy way of getting the EM is to look at your option change. So right now, and different option chains are going to give you different numbers a little bit. So the expected move right now is 38 plus or minus. So 38 up or down. So call it 50, 60, wherever we are now, and down. Okay, so that's the expected move. And you can also find it by looking at around the 20 delta. So here's your expected move on the bottom. And here's your expected move on top, 69.50, 45. Put call parity, I want you to notice something. Let's try the 25. So the calls are, or not put, okay, I skew. The calls are 69.45, the 25 delta. The 25 delta-ish puts, we'll even go with the 23 delta puts. So there's $1.35 difference between the equal delta put and call. So understand that as well. That's why people, IMHO, who look for equal credit on both sides, like I see Whale did, maybe his survivors find safety somewhere, end up going too close. If you're looking for 50 cents or $1 credit on each side, you're going to be selling your calls closer to the expected move than the trajectory indicates. Trade for the opening. Yeah, okay. Let's take a look. So my first thing would be to look at 69.40. Not much juice there. I mean, juice the way I do it. I know you like to do 5 wide, so for the open, you know me, I like to be away from the round numbers. And maybe 45, try and put in at a higher price and get more premium because we're going to come down, or even 40, somewhere in there. And on top, it's 75, I think, is way a bridge too far. 40 cents. Put that in. Oh, something like that. So if I were doing a 5 wide, I would probably look at something like here. Wow, you can go pretty far. If I was doing a 5 wide, I could look at something like 65. Or 70, you know, I'm just giving a rough ballpark. And maybe something like that. Maybe even go a little further, something like that. Somewhere in there, 65 or 70 to sell on the top. And 50, 45-ish to sell on the bottom. I'll throw in one for the sake of solidarity. Understand that we do have a path down. I don't think we get to 50. 50, we do have that negative gamma strike here. So abundance of caution, 45 would be a better number, just in terms of the sweat factor. Now, again, we could end up over here. We could never end up getting close to it. So that's where you got to kind of do your risk plan, et cetera, et cetera. Up here above 60, 65, this looks better, sticky. Sticky, if we get attracted to this 50, we could get a 40, 50, 60 bounce and end up sticking toward that. So that's what I'd be thinking, not investment advice, just a couple of traders thinking out loud. Okay, 69.09. I mean, 909. Oh, see this thing here? So this is, we have coyotes on the property. Now, they don't mess with the goats, but we have a Canis Panther hybrid. You can Google it, KNISPANTHER, Canis Panther, which is a Great Dane, Pit Bull, Doberman Lab mix. And we have events this morning, yes, Doberman mix, and he's a Marine. And he's a protection dog. And when he goes out at night and he smells those coyotes in for the 15, 20 acres away, he runs at them. You hear yipping, whatever, comes back when the mission is accomplished and the coyotes are repelled from the property. The other day, he came back with his doggy jacket ripped. It was freezing. He had his doggy jacket on, and his jacket was ripped. His jacket was ripped. Little droplets of blood on him, apparently not his. Now, coyotes will defend their territory. They're not going to attack, but they will fight if they have to. So we want to discourage the coyotes from hanging around. They don't like humans. And so if you take human scent and you put it around the perimeter, move it every 3 to 5 days because they habituate to the scent. Afterwards, they say, oh, wait, there aren't any humans around here after all. So that's what this is. And of course, plus there's humans walking the perimeter and the big dog marking the perimeter, but they habituate. So you need to move things around. Anyway, Yeah, the moves events this morning. Let me get back around to that. What I have, and I definitely could have missed something. We have PCE at 10 o'clock. That's the big one. We had personal income spending and whatever, and the jobless claims, all that. We have core PCE, the Fed's preferred measure of inflation. Yeah, he's fine. Apparently the drug blotlets must have belonged to the Coyote because none of them, he had no cuts on them. That's the jacket was shredded. What I'm concerned about is the way Coyotes fight. They kind of go for the legs, for the hindquarters, like for the hamstrings, whatever. And he's a big, tall dog, so it kind of be easy for them to kind of get in there. But so far, they have. I think they pretty much see this 130-pound dog with this huge head running at them, and they run, and they just kind of do a rear guard action, protecting their territory as they back into the woods. Gonna have to get a trail cam. Will be benign impact. I kind of think so, but it's potentially high impact. If there's, I think PC is going to be, like you say, benign or maybe positive, but potentially high impact if it comes up. Oh shit, inflation is flying. So. And that's basically it. Benign, do we think positive impact? Yes, right. The CPI is food and energy. PCE is the Fed's preferred measure of inflation. It's the volatile food and energy space, like they like to say on TV. And so that's what the Fed says they like to go by or way more. So I'm going to take them at their word. Yeah, CPI has food and energy, and who needs to eat or drive a car anyway, right? And so, yeah, that's it. So do you think the CPI is more important than the PCE? What's your take? I'm just curious, I'm not a big macro bro. I guess know what I know. GDP growth without drag on inflation will be the best outcome. Okay, well, when do we have that coming up? Didn't we have GDP? Oh, we had the revision. Okay, so I didn't see the revisions. Was there anything in the revisions that I don't see a big market move one way or the other. And Trump's going to run it hot. We're going to get GDP growth. They're talking 5%. Administration 5-6%. And I think they're going to do what they have to do to whatever they can to make that happen. However, they have to fudge things, move things, buy this, sell that, give refunds, whatever they're going to have to do, tax breaks, whatever they're going to have to do to run it hot. And kick the inflation can down the road until whenever, I don't know. It's been coming home to roost for the last 3 to 5 years, and it still hasn't come home to roost. That overspending, which we're doing. So I don't know. Could be in 6 months, could be in 6 years. I have no idea. I mean, we know they're spending. It's like, you know what happens? I like the credit card analogy. It's like, okay, so your credit card, you have $50,000 or $20,000 spending limit. And oh shit, I'm at my spending limit. What am I going to do? Okay, I'm going to raise my spending limit to 25 or 50,000. But you have to pay more interest rates. That's okay. I'll always raise my spending limit as long as I can pay my minimum payments or get a different whatever. And that kind of same irresponsible spending that a lot of Americans have, the government has. I don't know if one is isomorphic of the other. I don't know if one is a reflection of the other, but that seems to be the way it goes. And as long as they can keep raising that's the debt ceiling bullshit. That's how they get around that. Really, you shouldn't be allowed to raise your spending limit. 20,000 and you're stretched, and stay there and live within your budget. But we're not doing that. So that's just the way it is. Okay, that's my macro rant. Any closing macro comments or any closing market comments? Okay, in that case, I'm going to end it and see you guys. Thank you for attending. Nanda, thanks for showing up. And take care, everybody. Energy component will be a big thing. Okay, let's see. Hold on. You obviously know what you're talking about. Energy component will be a big thing due to AI data centers for sure. If it's benign, not rising, or even falling, that's good. No AI-related inflation, especially with all this spending. Very good point. Very good point. Very good point. That's a read-through. Energy to data center to AI to spending. That's a nice read-through. Thank you. I like that. Good read-through. Take care, all.